Hello, it's Brad Laurie, your Blockchain Brad, and today, once again, I have a very special interview and crypto conversation with Nicholas Merton. Many of you know him as DataDash. He's one of the most recognized and respected public speakers when it comes to cryptocurrency, when it comes to blockchain, and when it comes to crypto more generally. Nick, thank you very much for being here just to have a crypto chat and an update as we move into this very interesting era of blockchain technology and what it can do.
Brad, it's a pleasure to be here as always. I know we'll have a lot of interesting stuff to discuss.
Absolutely. Now, for those of you who are wondering, the main focus of this conversation today is all about BTC. It's all about Bitcoin, and it's all about exploring the form and functionalities that BTC does present. The idea is to have a conversation, to look at different angles, look at different perspectives, and just share our understanding, particularly when it comes to Nick, because obviously not only he's an advocate for Bitcoin, but he's certainly an advocate for really trying to change the socioeconomic status quo, allowing this technology to be something more than just simply an asset to hodl, but something of real use, both now and the future. So Nick, it's going to be interesting today. I want to dig deep straight away and get into a tough topic, and that is utility. A lot of people talk about it. A lot of people use it as the term for the token itself, whether that be a startup, whether that be BTC. So let's unpack that term and try and understand what it means in the context of BTC. So first, what does utility mean to you when we talk about Bitcoin?
Yeah, utility to me, man, it's a very complex and kind of philosophical thing when we talk about Bitcoin. You know, I was someone, for example, who really got captivated by the Bitcoin white paper from the days of peer-to-peer digital currency. And I really would love to see some kind of world where we have currencies, for example, that are separate from nation states. The vision has been a little bit harder to really grasp and really see over time. And I think there's a good mixture from both sides and the kind of views of what Bitcoin has become. For those who are more on the side of store value, a lot of it makes sense to me. I mean, Bitcoin has deflationary properties, has the finite supply at 21 million, not to mention as well, with the network not being able to scale as much as we would hope for it to at the moment. It seems as if the only real use case for Bitcoin right now that has been proven so far would be to hold it and, hopefully be able to hedge against global governments or, economic downturns, things, that sort of currency depreciation.
Mm-hmm.
But on the side as well, I'm really kind of heartwarmed, and I know this is a little bit outside of Bitcoin, but there's actually a few projects related to Bitcoin in this movement, the DeFi movement that's been showcased on Ethereum that I know
Right.
You and I have really been showing an interest in over the last few months. I really think that shows to me that there is some potential for Bitcoin and cryptocurrencies alike to serve as either providing a gateway for expansion of financial services and really expressing more utility than just storing value, but being able to settle immutable transactions. It would be such a waste. It would be such a waste if we put all of this computational power that we do put into Bitcoin and we just simply let it sit there, kind of like gold in a vault. I would love to see these networks using the computational resources to settle transactions for all types of things and to especially be able to transmit value in a sense of commerce rather than just hedging value. I think it's very important. That's the very first important thing, and you need to be able to do that whether it be gold or cash. You need to be able to have some way to relatively store value, and then the second goal after that is to exchange it. So I think that's what Bitcoin's going through right now.
And Nick, it's so interesting you say, you talk about the development, the continuum from the first start point or starting point for BTC when it emerged in 2009 with a clear agenda to be something of a peer-to-peer cash system, not just from the white paper, but also from the conversations that were proven through the cyberpunk movement and what they were trying to essentially elicit through a software system that could essentially circumvent some of the top-down authorities, whether they be enterprise or government-driven. That was the agenda at the time. So I want to talk about that more. You raise an interesting point also about how there's essentially two camps emerging, one being, the agenda of the SOV potentially moving to a currency ? And also those with utility beyond that when it comes to valorizing data, transfer of information through smart contracts, for example, and seeing what that can actually do for the real world, especially in SME marketplaces, especially in mainstream marketplaces where we haven't yet seen the adoption of them and the utility of them. So it's interesting how you explained that. But let's move it back again to BTC in the context of the start. Because when we talk about utility, we're not finished. I really want to dig into this deeply. Now, in the beginning, the utility was such that it was the premise technologically, based on what the form is of BTC, it's at a technological level. The premise at the start was to essentially establish a software that arguably could create some sort of means of global money. And we hear the terms being thrown around now, sound money, but just at a tech level, Nick. Let's explore that for a moment in terms of utility. Forget about philosophy. What was the utility at the beginning, and is it still upheld in form when we look at the tech?
Yeah, well, the utility of Bitcoin in the early days was the misconception that it was private, that it was, untraceable, and it was used on the Silk Road back in 2013. I remember hearing about it at the time. Yeah, and it was a very fascinating time. I mean, to me, as a very kind of, I'm not full-blooded libertarian, but I definitely do have my libertarian views, and I thought this is really interesting to see this. To me, it seemed so speculative at the time, and I had a very cynical view of Bitcoin because I didn't believe that there could be some solution to the central banking system that many people like myself were kind of festered over, and we were like, we wanted to see something up in the system. Well, Bitcoin was an interesting phenomenon at the time, and still to this day, it's interesting. They even that one use case of Bitcoin to be used for maybe dark market transactions and things of that sort, which some people would say is good or bad. The thing is, at the end of the day, it hasn't proved much else other than I can buy Bitcoin and I can make value with it. Or I'd say the one area it does prove value in is compared to alternative systems of remittance payments. If I need to send value across the world, there are a lot of people I know. For example, I met when I was actually, out of all places, I was in Hong Kong, and I met individuals who lived in Brazil. And they ran an export-import company, and they used Bitcoin to transmit value very quickly across the world. And between different exchanges and OTC desks, they were able to actually send and settle money very quickly rather than going through traditional payment gateways like SWIFT. So
right.
I'd say in that case, those are some of the use cases for Bitcoin. In that case, people mention remittance markets, wiring money across the world. That is definitely a very valuable proposition that gold, for example, can't really provide.
Right, but just on that point though, Nick, just to interject. Now, for that to be successful, firstly, they tend to be quite large transactions, or certainly not, very menial ones. Secondly, there's an assumption that fiat will also be related to that transactional process, because that's being done in order to get fiat in different currencies around the world. So I think that a lot of people don't discuss that aspect of the intention behind that kind of business transaction.
You brought up a very good point, and that use case doesn't really build demand for Bitcoin, because $1 million in input for buying Bitcoin inevitably is going to be $1 million Bitcoin sold, or $1 million worth of Bitcoin sold on the other side.
Exactly.
That's the same thing with XRP, and that's why I always try to tell people that Bitcoin itself, I really don't believe. So this is something you were mentioning earlier about it. I know you're talking about utility, and I actually really want to drive home my vision for Bitcoin, because as much as I've thought about this for a very long time, as much as I would like it to stick to the vision of the white paper, I think what is inevitably going to happen is Bitcoin is going to evolve into something we don't know, and it's not going to be as boring as a store of value, right? That's not what this is. This isn't programmable money, right? It is programmable money in the sense that there's going to be a lot more functionality. Just being a store of value doesn't really make it programmable money.
Right.
What I really see happening is it's going to be a two-step phase. Bitcoin's going through its first phase now that everyone's talking about, which is a store of value, or SOV. And I think that that's a very valuable proposition for a lot of people who do need to hedge wealth, whether it be people here in the West, or be those who are under oppressive governments, in countries, for example, like Argentina, which again just saw massive currency depreciation, 20% overnight. Again, there's when you have currency controls inflicted, that's where Bitcoin can really come in.
Right.
But this is just the first phase here. The secondary phase that is going to be very important is when utility comes, and Bitcoin is going to act as a settlement layer. And there's a really cool startup that I've been following that one of my friends that I met in the Netherlands is working at. It's called DeBank, and it's spelled DEBNK. And what they're trying to do is build a settlement layer on top of the Bitcoin net, or basically a financial transaction layer on top of the Bitcoin network that helps to conduct basically what's known as contracts for difference. And it's a term in the financial sector that basically it relates to basically financial types of bets in this case, where people could expose themselves to different types of asset classes with Bitcoin being the underlying value that's being settled in this case, the stored value in a sense.
Right.
So it would be kind of like, for example, if you and I were doing, we were exposing ourselves to certain types of assets, and we had gold backing the transactions in this case. So it's a very interesting thing. It's kind of hard to explain, but there's a lot of interesting use cases, from speculation to also just people having their wealth exposed in national currencies, different types of financial products, all being able to happen on a censorship-resistant network.
And what's interesting also is that you're talking about the prospect of other utilities to come forth. One of them is the settlement. I think, though, a lot of people perhaps don't discuss enough about what Bitcoin isn't at this point, because right now the majority of people who are participants in this ecosystem are either speculators or those that support rather the SOV narrative. Now, if we move it back though to the tech, the big question is, at the moment, if we look at just proof of technology, proof of what the form and function of BTC at the software level, that fundamental underpinning sort of component aspect, do you think right now, Nick, that there's proof that it has the capacity to function as a settlement layer? If we look at just the form itself, look at the tech itself, the mechanics, can we be sure that it even has the capacity, given it is the first iteration, it was the first technology to emerge in this sort of camp of tokenized economies for the future? And also given that typically in history, when we see these developments emerge, the first one doesn't necessarily win out in the end.
Yeah. Well, again, I don't want to put too much confidence to my opinion on this because I'm no developer. But in the sense of Bitcoin's code, in the sense of security, which I think is the biggest priority, absolutely. Bitcoin has proven high tier security. It's probably one of the most secure networks on the world. It's usually any time that there's an error in Bitcoin's network, it's usually human error in the sense of fault, improper private key management, improper wallet security, things of that sort. The Bitcoin network's been, humming soundly with all of the computational power that's going into it. Someone's always mining on the network. Someone's always confirming transactions. And the sense of its capacity, well, obviously the scalability topic comes up in this case.
Absolutely.
And if you have a network as highly scalable as Bitcoin, it's not, I honestly, in this case, as much as I personally, again, I hold that value of Bitcoin. I had hoped that Bitcoin would be peer-to-peer cash one day. I mean, it's very true in the sense that, maybe Bitcoin won't become a layer where you sell your coffee transactions in this case. But the problem here is that if it's too expensive for anyone, for example, people mention Lightning Network, and they mention a lot of secondary layers scaling solutions. I think that's going to play a huge role. But even if, for example, you had the whole world using Lightning Network, you always have to do first off, you have to do a transaction in this case to create a multi-signature address in this case for a Lightning Network node in this case. So in order to basically onboard funds on the Lightning Network, you have to do a settlement layer transaction.
Right.
And right now, the fees are still crazy high. And the reason why is because we're restricted to 1 megabyte. So
exactly.
I think that there needs to be much, again, I'm no developer and I don't have a better solution on my hands in this case, so maybe I can't complain. But just being realistic and saying as a team, we're all trying to work towards this vision. Right now, Bitcoin is not scalable for the world, even with Lightning Network and with difficulties of setting up the Lightning node and learning all of that. Yeah.
Sure, and Nick, sorry to interrupt, but obviously it really raises the question of flexibility rather than having sort of a concrete, finite approach to the code itself, to the technology, because already in this conversation you're alluding to the value of being flexible as Bitcoin develops, as it has done in the past. Now, it moves back again once again to the white paper itself, and we talked about this pre-interview. At what point does that document itself become the premise, the basis for the whole ecosystem, a reflection of its robustness? And should indeed that document change, as we're talking about, to reflect the evolution, reflect the progressional developments that indeed are happening with BTC right now?
So if I'm correct in this, I just want to make sure, Brad, you're kind of saying how in this case with for example, most altcoins or kind of alternative cryptocurrency projects out there, you tend to see an evolution of the white paper that shares its stated goal in this case, its change over time. Is that what you're it should BTC do the same? Yeah, I would say, well, some people can make an argument that Bitcoin should do that because it does have a group of core developers. But the problem I think some people would say is that who really has the right to say, for example, what Bitcoin's stated objective is in this case? I mean, Satoshi, when he wrote that white paper, he had a stated goal in that case. That's what he believed at the time was what Bitcoin could become. And, maybe even Satoshi today might disagree with what he wrote. All right. We just don't know because Satoshi's gone. So for people to come along and be able to edit the white paper and kind of state the stated goal of what Bitcoin is, I think that would kind of kill off, what Bitcoin's about.
Well, that's so fascinating you say that, because right now we see in the environment, Nick, that invisibly this is happening anyway. Without the changes to the white paper, the narrative has certainly shifted. Andreas talks about that as well. So do we ignore the fact that now the social consensus is such among, those who are deemed Bitcoiners or Bitcoin maximalists, they certainly have morphed from that original agenda?
I'll tell you this, Brad. I know it seems a lot of the times that the interests are selfish in this space, and sometimes people are just buying. The store of value case is very easy for most people to get behind, because it's like, hey, if I buy something, it's going up, and we just all kind of get on the bandwagon of saying, oh, it's going to go up. Yeah, it's not very exciting. But the thing is that it doesn't stop there. As I mentioned, there's projects like DeBank. There's all kinds of people who have really added interesting contributions over time to the Bitcoin network. And here's the thing, as we talk about other competing projects, it's survival of the fittest. If the miners on the Bitcoin network do not either adopt upgrades to the network that allow these interesting second layer solutions or applications to be built on top of Bitcoin's security and settlement factor, then it's going to lose out in the end. The miners who should be following their economic incentive to expand Bitcoin to be as valuable as possible, they will lose out. And I think they're the ones who have the biggest amount of value to lose in this case. So, because in this case, if I want to go sell my Bitcoin, I can go sell in the market, get into another project. They have invested tons of money into the mining equipment. So I think that they're very slow to make these changes, but the Bitcoin right now already has the framework where people can start building on top of it and adding unique things. It's just that it takes time and it doesn't happen overnight, especially when you're dealing with transacting money or trying to build financial services. It's much more complex than just software.
It's fascinating we talk about this, especially given that there's a plethora of layer one solutions, or perhaps not say solutions, but layer one startups that are emerging now, trying to also look at that trilemma as we know it, trying to solve that equation and also trying to scale, without compromising security, which obviously BTC is well known and famous for. But Nick, if we move it back to gold, to utility for a second, I wanted to talk about gold, because a lot of the time when we look at crypto Twitter, for example, if we explore a lot of the social media narratives, we quickly see this statement that BTC is the new digital gold. So I want to explore what that actually means, if there is any veracity in that statement, when we start to understand gold itself. Now, if we use the utility argument, a lot of people would, they mock the idea of gold, having real utility, because they say in many crypto circles, particularly the maximalists, it's just jewelry. But I wanted to present an argument or a suggestion that it's actually a lot more than that. When it comes to gold, we have different verticals that have proven utility basis, such as things like ecclesiastical support may not be regarded as a mainstream utility, but when it comes to art and culture, it's very relevant for use case. We look at things like the conductivity, of its form means that it's applied in many different industries, right from electronics, engineering, and many other areas, as manufacturing. Then we have obviously that predominant aesthetic value from that culturally inbound point of jewelry making, something that also translates into awards for, various different sports, including the Olympics. So it has that symbol of power and value. Dentistry, medicine, aerospace, engineering. I mean, the list goes on for utility. But the reason why I make these points is because in crypto Twitter, it's really understated. A lot of it is dismissed because they're saying solely and wholly it's jewelry. But the reality is that in history, throughout all iterations, throughout all of the many eras where gold has been known and been acknowledged as something of value, utility has always been part of that conversation, as well as currency, as well as commodity. So at what point do we acknowledge the differences and accept them as they are, as distinct with gold?
Yeah, so first off, I really appreciate you having kind of the contrarian view in this case, because I know a lot of people, it can kind of be an echo chamber, especially on crypto Twitter, when you've just got feeds of people you're following all in the same space. But I'll say this, Brad, a lot of the things that you did list out they're very important things, I think, in the significance of a universal understanding that gold has some kind of value. I mean, it's from thousands of years ago in this case, people appreciated the values and properties of gold because it didn't just look pretty, but it also had its desirable properties in it. But here's the thing I would state. The cases that you listed, I know a lot of people say it's just used for jewelry. It's actually really not used just for jewelry. It's used for jewelry and for private investment in this case, either between things like the central banks and organizations like the IMF, or for private investment. Mm-hmm. And if you take a look at jewelry and private investment for gold, you actually find that 85 to 90% of all the gold in the world is used for those two purposes. Mm-hmm. So 10%, that 10% you mentioned of all those different use cases, it might have been more in history that was used for that. More was about
today. Yeah, so
in today's world,
have changed, absolutely.
Absolutely, yeah, and that's the thing is, over the last decade, I mean, it makes sense because gold has become a growing store of value. It really has been over the last century. It's become this kind of like, oh, you should have a little bit of exposure in your portfolio to gold, or that gold has become a completely sound and renowned kind of.
And Nick, this is a perfect segue into the discussion now of store of value and currency as well, because with gold, as you mentioned, the primary use case for gold in the modern era is bullion itself, is the vault, the storage of this as an asset, especially since the de-standardization or the deregulation of, or the fact that paper money, really emerged as a significant means of inflationary currency. So in this sense, Nick, given that the top-down sectors of enterprise and government seriously back the bullion approach, the SOV approach, is that another difference as well to Bitcoin in that it has a global backing from all sectors, and it's also been had the start initially in the commodity, currency, and utility, born in history that's come forth, now as an SOV, and all that history has to be acknowledged, surely.
Yeah, I would say it is definitely something. It's the reason why gold's a $7 trillion market and Bitcoin's I think it's $150 billion right now, maybe $100 billion. I mean, it's the reason and the difference of the scale of the market. I don't think it gives gold so much any benefits in the long term. I think in the short term, it's the reason why there's a difference in value. The thing, I look more to the fundamental properties in this case, and I can actually see a lot of ways where Bitcoin would be more favorable in government's eyes, because in the case of gold, we have to first look at all the differences in properties here. The first thing I think about is supply. The reason why Bitcoin is loved by so many as well as gold is that it feels limiting in nature. Bitcoin is relatively limited gold is relatively limited because there's a certain amount within the ground that we can extract. And over time, the idea, that's the thing. Technically, gold, yes, is finite, maybe in the sense of the supply we have on Earth. There's also the projection that somewhere in space we could.
I know, Nick, but let's be real about this.
No, but I know.
Let's forget about the possibility of asteroids coming.
But here's the thing that makes it not finite in nature, because we do have maybe a finite supply on Earth, but over time we don't know what that supply is. We have no way of extracting an actual number of how much we have on planet Earth. And because of that, we have had over the last century about 2% annual inflation, 1 to 2% annual inflation in gold markets. There's actually a really interesting chart that came out, I think, from the Financial Times. It's very difficult to find this data, but to actually showcase gold's inflation over time. And it showed over the last 2 centuries how gold supply has gone, basically, I'll try to match to my webcam here, it's basically gone like parabolic over the last few years.
Yes, it has.
But it's still much more limited than a lot of fiat currencies. Which
right, and Nick, the thing is as well, once again, the fact that we can't necessarily prove the finite nature because some of it hasn't yet been discovered doesn't dismiss the scarcity of this resource. And that's very important because, and the other point to make here, to play the devil's advocate, is that we talk about the present day utility or the means in which it's valorized, and that is predominantly through that store of value sort of perspective. But that's on the basis, I would argue, of millennia of history, whereby it's built up a semblance of value in different areas so that it is something that people prize. And I think that's very important to acknowledge because people don't, put forward the argument that utility itself has value in that context of historical developments to a point where SOV is the main, main perspective of value today. Likewise, the fact that people overlooked that it was a currency, well and truly in the BC era of time, it was used as a currency at that time. So I think that people overlook that gold itself didn't emerge as a currency later in the day. In terms of time and development, it was a currency. And now, in fact, the predominant use case has merged or moved into what is now an SOV. So if we move it back to BTC, for example, let's keep going and let's explore, how you see this juxtaposition. Because it sounds like, Nick, you don't disregard the value of gold.
Oh, yeah, no, I think gold is an absolutely valuable asset. I honestly wish I owned more myself. I have actually a little gold coin that, a gold and silver coin that I was actually given from a friend of mine. But the thing about gold in this case is that it has some properties that Bitcoin doesn't have. It does have real commercial use cases, same as silver. That's why precious metals, I think, even in times good or bad, may not be the worst thing to have in your portfolio. But along with that, you have to think about some of the properties that gold and silver have. They're tangible. You can, for example, I would say in this case, if for example, if you have worries about these are kind of this is a far out criticism, kind of like my criticism of the idea you could go in space and mine gold. Bitcoin's network could shut down if there was a solar flare or, the internet gets blown out, right? And that kind of doomsday scenario, gold and silver went out. There's a lot of different things that are good with gold, and that's why I don't think there's any supposed competition between the two. I think what Bitcoin serves as is it serves as a not only a global hedge, but it serves as the next store value for millennials, Generation Z in this case. If I'm really thinking it from an investor perspective, no matter if Bitcoin's really got the fundamental know-how to really be better than gold, it's going to be, for my generation, the hedge that people go to, and kind of the way that people kind of have a way out and opting out of the banking system in this case. That's at least what it's formulating to. And with the finite supply that Bitcoin has at 21 million coins, it becomes very clear in this case, again, the difference between limited and finite, where we know the rules from the start that we know predominantly at 2100, there is going to be 21 million Bitcoin in circulation and no more. And
Nick, we're definitely going to talk about that because there's a lot of conjecture about that among some of the academics about whether or not BTC by design from a social consensus perspective is indeed finite. I'm sure you know about that question. But I want to talk more about non-correlation for a second and asymmetry, because some of the maximalists and some of the Bitcoiners really put forward that argument that it is a non-correlated asset, that it has its own asymmetrical point of value. Can you tell us a little bit more about that? Because in many instances, they were using traditional markets to really explore this idea. But then in recent times, it's been obvious that there's been a real mismatch in that argument, in that sometimes the correlations were there, and perhaps for that reason, the argument is debased because there has been no overt pattern at all.
I don't think there's too many like Bitcoin doesn't correlate to too many things. I think it's very easy to find correlations. It's kind of, and someone for myself, for example, I used to love a good conspiracy. It's always, some people sometimes overanalyze and overconnect the dots. The thing about Bitcoin in this case, the reason why it, as well as gold, I believe, but they both share this property of being an asymmetric, or something that's completely separate from the world. In this case, it's not correlated directly with anything. It's simply with the fact that it's not created or controlled by any government or corporation or entity in this case. Now, you could say maybe the miners in this case. That's fair. But the miners have an incentive structure, so they aren't seen as a threat to the network. In this case, they're the security that provides transparency.
That's true. It depends on, I guess, the magnitude of one particular mining entity. In that sense, mining monopolies could be a point.
Yeah, the idea is that the game theory of Bitcoin is that as more miners come onto the network, it becomes more expensive to do that 51% attack and to try to corrupt it in that case. But you're right in this case. Basically, the idea between Bitcoin and gold in this case is that, if, for example, unlike the U.S. dollar, if the U.S. economy goes into recession, the U.S. dollar will crash or will face a depreciation in its purchasing power. Whereas Bitcoin, it's not tied to the U.S. in this case. Now, if everyone in the U.S. was using Bitcoin in that case, yes, it probably would lead to a devaluation in this case. Because in that case, if it's, but the thing about it as well in this case is it hedges much better because it's not going to deflate. in this case. So it's not going to inflate in its value in this case, and
Nick,
lose appreciate value.
Exactly, and that, for that reason, it makes me wonder why some of the prominent speakers in the crypto space even bother referring to other markets in a comparative or contrastive way. Because if it works in its own isolated state, in its beautiful sort of independent form, why is there references to inverted markets, to correlations in any way, when literally in the same breath they're saying it's asymmetric and it's uncorrelated or it's non-correlated?
I would say in this case, the reason people bring it up, I mean, it's for a mixture of those from me, for example, like myself, who are just interested in financial markets and have kind of been, watching a lot of the interesting fundamentals and in monetary policy and in the financial sector starting to kind of wobble. It's fun to watch. But along with that as well, I think that a lot of people state that this is going to be the catalyst that drives a lot of capital to cryptocurrencies and a lot of buy side demand. And this again goes towards the store value or hedge argument. The idea that people believe that there's going to be a big exit out of markets due to a recession, currency depreciation, really insane markets like the negative yielding bond crisis that's going on. There's about $16.7 trillion of government bonds, actually general bonds, sorry, it's mostly government bonds, but it's also corporate debt as well. That's negative yielding. So if you're holding that, you're actually having to pay to hold those bonds.
Right.
And you're losing money. So it doesn't make much sense. But the thing is, you have the way that ludicrous bubbles like that get built up is because of really flawed fundamental systems where the value of the bonds go up over time as the yield drops. So people are like a Ponzi, they're just getting in this case. It's this bubble that's getting blown up into magnitudes of proportions until finally someone pulls the trigger to exit and a lot of wealth is going to evaporate. So they're going to look to park that capital somewhere.
And Nick,
stocks. Be properties.
Exactly. And you raise a good point, Nick, when you say Ponzi. One thing I have learned as I've started to study more about the dynamics of money and the dynamics of power is that there's nothing new in the narrative of Ponzi when it comes to Wall Street or when it comes to, historical means in which states and enterprises were trying to assume a position of economic control. I mean, Ponzi sometimes is, I think, is assumed to be something that's illegal and something to be completely inappropriate, and that's true. But we don't necessarily explore how it can be likened to some of the operations of traditional business, of traditional economies, because sometimes it's Ponzi-ish in that some aspects of it are not egalitarian, not fair, and not for the people.
Yeah, I think that term Ponzi-ish is really good because sometimes Ponzi scheme can be misused in this case, and I sometimes catch myself with this. But I would say you could use another fitting term would be bubble in this case. I mean, people always say that Bitcoin's a bubble because it goes up 20, 30x and then it crashes 80%. That doesn't make sense. I mean, yes, you could say that in the short term it was a bubble. That doesn't make Bitcoin a scam or a Ponzi in this case. It same goes for equity markets and housing and the housing market. When they go into bubbles, you can say it's very Ponzi-ish in this sense, but the reason why they grow to so large is because there's usually very interesting mechanisms utilized to push values high. So we've been, I think before the show we were talking about the equity market. And the thing is, over the last decade, the United States, and this has been duplicated everywhere. I just know it predominantly here in the U.S. because I live here. But the Federal Reserve really led the charge by lowering interest rates and one of the world economies down to 0%. And what that did is it led people to rampantly speculating on assets. It didn't lead to more lending like they said they were intending to happen. It really just led people to going about buying assets because if capital's free, you can buy just about anything and it's going to go up in value if everyone else is doing the same thing. And if people, for example, when they go about investing in stocks or whatever it may be, they buy ETFs that are basketed investments. It's passive investing in this case. It's people aren't thinking about what they're buying; they're just buying a basket, and that's the same things can infect crypto markets and build up rampant bubbles. It's exactly why we had the retail bubble in Bitcoin when it went up all the way to 20,000.
Exactly, and Nick, we
just knew how to open up a Coinbase account.
Right, and we see a recurring bubble in that sense. But I wanted to talk about that. It's perfect, again, in a segue in terms of the emotive aspect of crypto, the narrative aspect, the network aspect, the network effects as well. Now, we've seen, as you mentioned before, quite rightly, we've seen examples of bubbles bursting and then developing again, and once again another bubble would emerge in the development of the Bitcoin history. And suggestions are being made that that's a very natural progression as it moves towards its use case. So one of them being some sort of borderless system in some way to advantage, the masses. But in doing so, some would also argue this is a millennial coin of belief, in that, while in the meantime, in this interim phase, as its SOV, sort of narrative is upheld, many people are suggesting, hodl for now, wait for the rest of the meaning of Bitcoin to come forth. And in doing so, there's such a reliance, it seems, on the narratives and the networks within Bitcoin itself. What do you think about that?
So can you rephrase that in that case? I see, for example, like it might seem kind of hopeful, for example, to just hope that one day it's going to become a store of value and we all kind of hodl. It kind of becomes a self-fulfilling prophecy. Is that what you're kind of leaning?
It's more a case of right now, Nick, a lot of people are being sold a message from the maximalists, from the Bitcoiners, from anyone who's really a proponent that the primary asset right now, or the primary point of value, is the SOV. But there's also suggestions, if you look at a lot of the Bitcoiners, they're suggesting that there's a progression. This is just one part of many phases as Bitcoin evolves. And so, if any of them are upholding that position of a future point of value, whether that be a currency, whether that be some other thing, the point is the message being sold right now is hodl. The message right now is being sold of store of value. And so my question is, what's the power of belief? What's the value of belief alone when we see so many of those in this camp of the maximalists and the Bitcoiners sending the message forth of value this system, hold it, believe it? The power of belief is immense in a social network.
Yeah, I mean, what happens in everything. I mean, you have, for example, people who tell you to believe in different types of goods and services. For example, I'll give you an example. When people always tell me, like, when they hear I do investing, they're like, "Oh, have you put any money in the property market? Property market always goes up." Or, have you put money in equities? And the stock market always seems to go up. Every dip it goes down and goes back up. And I think it's the same kind of thing with crypto. There are people who are going to selfishly promote it, whether they understand it. I mean, I'll tell you this, I'm not the brightest mind when it comes to crypto. I'll say that right off the bat. But man, when I see some of the people out there promoting crypto who I can obviously tell don't know the first thing about it.
Yeah, it's worrying.
Yeah, there's a lot of people out there, and it's obviously for selfish interest in this case. Fair point. They have a room to be here and stuff, and I think in due time people filter out who's really in this space for good reason and knows their stuff. But the thing that I want to get to here is that I kind of fit into that camp. For example, believing that there is some potential for Bitcoin to move. And the thing is, you have to do that with any investment. Every investment is not finite. If I invest in ExxonMobil, I have to hope that over the next decade or two that they have already started the plans to change from an oil producing company to a renewable energy company, right? I'm making a huge bet, especially investing in a giant like them who can make it really poor decision not to reinvest for the next wave of energy, and they go to zero and another company comes up. In the case of Bitcoin, as I mentioned earlier, that thing that DeBank and a few other startups are working on, these kind of new interesting settle use cases for Bitcoin or other things of the sort that we haven't even discussed. I believe that there's a lot of potential for Bitcoin. It's like Ethereum. A lot of people, for example, mention how, Ethereum's so inefficient, or, for example, it's just a platform for ICOs. Ethereum has one thing that's very valuable that you can't just buy, and that is the Ethereum developer community. Tens of thousands.
Hence network effects. Hence this question as well about the community.
Yes, exactly. You're very right. The Ethereum's thousands of developers are probably going to be its biggest solidification to being probably the most predominant network, if not, equal or slightly under Bitcoin's network in the sense of value over the next few years. Because with the network effect of having developers and users, that's what makes any network expand. You can have the greatest product in the world. You can have the greatest company with the greatest solution to any core problem. But if you can't market it, if you can't get people using it, it will never materialize.
Nick, you raise an absolutely fundamental point here. The power of the narrative is also connected with the power of the network, which is connected with the power of the developers in Ethereum's case, and certainly the power of, I'm not really sure who the camp would be in BTC, whether that be the coders and those who are the whole...
Probably the core developers,
and the hodlers. Because the reason why I add the hodlers, Nick, is because many of the people who advocate for BTC right now as a store of value and and maintain and uphold hodl philosophy is arguably because they own it. And so the power of ownership in the BTC camp is very, very powerful when it comes to advocating for more of that narrative of SOV. And whereas with Ethereum, for example, there's a very strong advocacy for development. There's a very strong advocacy for applications. So, if we hark back to BTC for a second, do you think that this whole retrospective sort of point of the fact that someone's bought and now hold BTC, is that possibly stifling it to become more of its, what it was potentially aimed to be, which was to evolve into like a multitude of different functionalities?
Well, again, as you had stated, Brad, Bitcoin's original intention was to be just electronic cash. It was just to be that Bob sends Bitcoin to Alice in this case. And I think that's an interesting use case. It's peer-to-peer cash. And maybe in that case, I think store of value is inherent. You need to be able to have, if I'm holding Bitcoin and then sending it later, I need to be able to have a relative understanding of the value of it. But the thing is, Ethereum's network from the get-go was very clear in that it wanted to be a world supercomputer. Funny enough, though, is that it didn't become that. It became something completely else. It became something else. It became a platform originally for ICOs that didn't really work too well. And then now it's coming a platform for decentralized financial services and broadening access to financial services. And I'll tell you this, Brad, to really kind of build on your point, because obviously you're bringing some very good, I think, criticisms to the table for the Bitcoin community. I've completely, I hold Bitcoin and I hold a lot of other cryptocurrencies as well. It's where I'm most exposed personally. But I'll tell you, I have no interest, continuing to chat, or not so much that this isn't a negative thing. I don't have the interest that I used to have in the Bitcoin community, for the reason being that there isn't that kind of narrative of, oh my God, we need to expand financial services. We need to open this up. We need to make borderless finance. We need to completely take down the banking sector. I've seen a lot of those people and really bright-minded individuals who are just so kind and in the movement for the right reasons. They're in the DeFi movement. And they're on Ethereum because Ethereum's the only blockchain that can really do that. Outside of, again, those few exceptions, as I mentioned, the bank and a few others. I haven't found...
So, Nick, in that respect, what do you think of those maximalists, those small number who are the extreme maximalists? And I'm not just alluding to BTC. I'm just talking more of the agenda of these kinds of extremists, when they literally shut down all prospects and possibilities when it comes to the technological applications, the technological advancement for better outcomes for us all. Why are they so ignorant in that way? And is it actually detracting from the value of BTC and the Bitcoiners who are not actually like that?
To explain it simply, it's just tribal mentality. If let's say, for example, I was a Bitcoin maximalist or an ETH maximalist, I loved one blockchain over the other. It's a very tribal response to be defensive and say, oh, these other things are terrible, and you spend your entire day talking about it. And that proves that you've got probably some rooted insecurities about your investment in this case. And that's probably why you should diversify, maybe give another piece of technology a chance.
Fascinating perspective. And Nick, on top of that too, a lot of people don't talk about this. I don't think anyone has actually broached it clearly. Some of those maximalists are paid. Now, what I mean by that is you might have third-party entities sponsoring their programs or sponsoring, their agenda. I mean, we can name some big names when it comes to Bitcoin maximalists. But do you think that's an issue in itself, is that not only are they significant holders of the coin itself, but they're also paid to promote this? Does that indeed thwart their maintenance, their position, so they just keep maintaining that position and not look beyond to the integrity of the tech?
Yeah, there are some people who get carried away with money and things of those sorts. I mean, I've seen a lot of YouTubers come and go over the last, few years since we've kind of been, doing videos. I think you and I both know, we've talked, and I think in the past, the phases of YouTubers. There was the what was the first, the BitConnect wave, and later part of 2017. Gone in an
ICOs, IEOs.
Yeah, the second one I talked about was the hype wave, and that was the ICO 100x wave of YouTubers. And those guys, again, I don't need to name names. People know who they are, and now they're gone. If you've been around the space for that time and stuff, and it's I think very clearly now we get down to YouTubers like yourself, and I have Brad and a few others and stuff who I think are much more quality. And there's still some people. I know you've been, for example, very driven on the idea of pointing out a lot of YouTubers who have seemed to kind of, for example, get caught up in money. And that's fair. Some people do. We do sponsored content on the channel, but we don't like go to the extreme where, for example, I cover anything that I don't feel comfortable with. I don't cover, I don't try to cover ICOs or IEOs and stuff. I think it's really kind of wrong to cover that market.
And I very much respect that, Nick. I
Yeah.
respect the fact that you need to eat, and I think many people understand that. I mean, at the end of the day, your premise is education and tech, but that's where many people differ, Nick. In the space, many of the different speakers in the space, in that public privileged position, they're looking more about how they can fill their bags, stack their sats, get more BTC fundamentally, or whatever it is that they value. And in doing so, sometimes they don't consider their audience. They don't consider the power they have and the privilege they have. I think that's more the point. So looking back now, you are right. Many people did certainly shill for shilling's sake. What hopefully you're laying down a foundation and a precedent for is trying to set forth a really strong narrative that education and technology really is the bedrock of the future of all of this to even work.
Yeah, I mean, I'll tell you this, Brad. Personally, for me, the thing that like keeps me up at night is I stress more about not knowing whether or not there are more people because of me getting involved in crypto or having some kind of understanding or exposure to this new asset class, because I really do think it's going to be very important. I don't care so much about. The thing about money and wealth is some people get caught up in it. I've seen it as I've gotten to travel. I've gotten to meet a lot of great people. And I've also seen some people who get carried away by all the craziness of the space, the conferences, the kind of like high life feeling that some people get. I don't really care about
it. It becomes almost a bit of a self-fulfilling prophecy, I suppose, because money's part of the nature of this system, that there's always going to be a camp of those that are essentially trying to utilize the system to their own ends, to basically capitalize on the beauty of this and of the prospects of this technology. Because obviously being tokenized, the money is involved, the prospects of being paid are there. So it all comes down to personal agenda. And that's why we are friends beyond just, these collegial discussions where we do open up, and talk about different perspectives. What matters is that we're open to technological reform. And our premise is not about trying to essentially send a message forth of technology that may not have any value, just for the sake of being paid. That is a big difference, because there's a huge issue right now in many of the questionable startups that are now in the space are offering substantial amounts of money to many different parties so that they can get a platform for starting when perhaps they shouldn't.
Yep. Yeah, I think in due time, again, as I've mentioned, it's really upsetting because I wish it would just kind of go away. It wouldn't be a problem, but it's a filtering process. And people, eventually, sometimes, again, people get burned and they learn, for example, I put trust in someone for this, might as well not put my trust in them anymore. And sometimes people will go off and they'll look for others, people who have showed consistency. And I think that's something that in due time it will come and stuff. I know you've been doing a great job, Brad. You've been consistent from the beginning since I've watched you and everything. Not to kiss up to you. I know you're having me on your channel, but just wanted to say, in all seriousness, I mean, again, it's a very good thing to see that there are a lot of people in the space. And again, asking very interesting questions, bringing on people from different viewpoints. I think that's what's very relevant for this space.
I appreciate it. Likewise also, mate. And not to shill your bags either, but when it comes to integrity, you're pretty high up there. Everyone respects you because you don't BS, you say what you think, you're pro-tech, and it's clear, Nick, that you're here for the long term. And that's what sets you apart, is that a lot of people are thinking short term perhaps, but you're certainly not. And I imagine you want to be around in discussing these topics and really representing the space for as long as you can. So kudos to you and congratulations for all you've achieved. And Nick, let's move it back a little bit more to some tough stuff. And this is with regard to, let's start with some positive stuff and let you speak with regard to some of the BTC assets or features that are, things that people regard as points of value. And then I want to talk about social consensus, the power of that, whether or not that can actually be changed fundamentally, and is it mutable? So some of the things that I found as statements for assets for BTC are that it has a high stock to flow ratio. We talked about the issue of being non-correlated, but also its high divisibility, or the fact that it is a divisible system. So can we talk about the stock to flow ratio, why it's of benefit, and why divisibility matters?
Mm-hmm. Yeah, well, I'd say in the sense of divisibility, I would say it's more not the fact that it can divide so many times. I think breaking something down to one set is not something you'll have to really do unless, again, it becomes a global store value. And you could, anything digital, for example, if we really wanted to, digital cents, we could break into, fractions of a cent in this case if we wanted to.
Mm.
I think the value comes in the sense on the Bitcoin network that it's easy to divide that money in the sense versus its contrarian competitor in this case is it's always thrown around, which is gold. So I think that's really where its divisibility is beneficial because gold can be divisible. It's just that it's very difficult to divide with its certain type of nature in the sense of the metal. And in the sense of the stock, the high, the ratio that you're talking about. I'll be fair. I don't know if I could really speak as to whether or not that would be a benefit or not. I would say, if you could dive into a little bit deeper, maybe I could explain it. But so what was the point?
Well, just the point that it has a high stock to flow ratio. So just in basic economics, some argue that is a point of value. Just the fact that it is possible and that a ratio exists. But we can leave that for another time, discuss that later. There's so much to get through. The thing I wanted to focus on is the social consensus aspect now, because, Nick, one of the things that some of the technological sort of proponents of other forms of sound money suggest is that one of the key risks or inherent challenges to the success of BTC potentially is that it may not be it may not be sound money in their position, because when it comes to the finite supply or that fixed supply, when it comes to the hard cap itself, some are suggesting that it's mutable and that it can be changed. Now, what do you say to someone who suggests that the block reward, for example, can be changed, and obviously the hard cap and many different aspects of its design?
Right. I would say that's been something that's kept me up at night sometimes as I've thought about like Bitcoin and crypto is whether or not that would ever change. I've come to the conclusion that would only change when it would become an issue, like sometime in 2100. So the nice thing is, you and I probably won't have to think about it in our lives, but it is something it's very interesting to talk about. What happens one day when the block reward does run out? What you're inevitably going to get is one of two things. Because mining it's economics at the end of the day. There's a cost to mining. So you'd either have one of two things. Either A, the block reward, at least to my understanding, and I could be missing a third scenario. A, the mining reward changes and there is some increase in the supply over time, probably something that won't tick off people too much, that allows miners to still remain profitable. And B, the other scenario in this case would be that the block reward does not change. The only thing keeping people as an incentive to mine would be the fees. And what you're going to probably get is either a huge jackup in fees on the network for settlement layer transactions, which will probably turn off a lot of users. So it's probably not going to be that. And it's either most likely going to be a huge decline in the hash rate. In this case, a lot less people mining in this case on the network. Either in scenarios where it's actually sound to be able to mine due to low electricity costs, or it would be due to the fact that there's such a drop in competition that you're more likely to discover a block. So those are the kind of scenarios I'd see. What would be really interesting, I was just thinking about a possible third scenario, I think, with the increase of the block reward in this case, that maybe it could be that the block reward it varies over time in this case, depending on the hash rate. So like, for example, if we wanted to maintain the hash rate where we were at that given time, I'm kind of going down a rabbit hole. I guess probably shouldn't.
But I respect the fact that you are, because the reality is that when we pose this question, we have to anyway. It is a rabbit hole in itself. It's a loaded question. But in asking this, Nick, the reason I did, and I appreciate that, we don't talk about that third proposal yet, because I don't want to sort of put you in a situation where you're suggesting that. But more to the point, that when we consider the value of government and enterprise support in the long term, so say, for example, you have a system at play where it's geared by the people, made by the people, designed for the people, but eventually again garners that adoption so that indirectly governments and enterprise back it simply because it's working. Or even if they don't, the point is that adoption flourishes. Now, in that situation, the big question is, does the fact that we don't know the outcome, we don't know that whether or not this social consensus aspect is relevant or not? Is it a vulnerability to the point where it debases some of the real holistic trust in the integrity of the software? I'm really serious about this, because if it is a problem, if it is indeed a bit of a conundrum at the very least, doesn't that also create some fractures of trust?
So in this case, just to make clear of the point, it's basically if governments and more kind of authoritative institutions in the world and stuff, if they don't really come on board with accepting cryptocurrencies in the long term, maybe they crack down, for example. Yeah, is Bitcoin still
especially in the light of Bitcoin, Nick? Because obviously the ideal scenario for the maximalists and the Bitcoiners is to see a widespread flourishing of this technology. Adoption right through every sector, all the way to perhaps enterprise and government indirectly. And I mean that indirectly because obviously you want it to be a people's coin. But to achieve that, you need trust in the software. You absolutely do. So the question is social consensus a risk that is such that it corrodes some of that fundamental technological trust?
So Bitcoin doesn't really, on a technical side, Bitcoin does not depend on the world adopting it. Its technology works. And the sense of it being actually like, for example, when we're considering market value and whether or not people will be able to use it in their day-to-day lives, yeah, government will play some role in that. I think the interesting thing, though, is I'm very observatory. For example, I can make an argument spouting the same kind of regurgitated facts that people say, oh, governments can't stop Bitcoin because it's censorship resistant, yada, yada. The thing I notice as a point of view is I notice I look across the world, and maybe outside of a few anomalies, maybe like the Venezuelan government or a few others have maybe tried to censor crypto or have stated, we're going to regulate it very hard. The world hasn't really, done anything to stop Bitcoin, which is probably the most interesting thing. And that's very true. Not yet, fair point. But it's the thing I've noticed is that usually with new emerging technologies like that deem a threat and has now been relatively understood by central banks and kind of the financial regulators of the world, they haven't been able to really stop it, or they haven't decided to really do anything to stop it.
It's fascinating you say that, because we've seen India react to it, Nick. We've seen a very vehement reaction to Libra. So the question is, not so much will or won't they react to certain cryptocurrencies or certain startups that have a suggestion of monetary policy control, and especially when it comes to something like Libra, because they already had such a major platform to sort of threaten the status quo. So the question more so is, are we paying attention to the fact that now we're starting to see governments react?
I think the reason why governments are having such a reaction is obviously Facebook as an entity has a lot of influence on the world. But I think that as well, for those who really understand this technology, the reason why they would be more hostile to something like Libra is because it's in its early stages and it's under a central set of companies. Right. And this is the cool thing about Bitcoin, is that fundamentally what makes it a cryptocurrency and what makes Libra not a cryptocurrency in my mind, it might make it, a new form of currency, but not a cryptocurrency, is that if there is a way in this case for Libra to be censored by government officials, to be able to shut down the Libra Association, to, for example, in any way strip ownership of the assets that are supposedly backing Libra, or be able to freeze transactions, in this case, to seize underlying value from a user's account. This would be the same with a central bank cryptocurrency. I know that there would be some backdoor in this case for someone to be able to freeze someone's transactions. Central banks won't allow that with digital currency. But this is where Bitcoin stands out. The idea of public and private key encryption. That's what makes Bitcoin, Ethereum, all these cryptos unique, is that no one can freeze your transaction so long as the network is humming along with its consensus mechanism, in this case proof of work, which has been used on Bitcoin and Ethereum. No one can take away your right in that case to your funds.
You raise a really important point. I mean, we've seen Belgium, for example, they did certainly seize a huge stash of BTC, but that was more, a criminal investigation, their findings, and so it's well known.
They got access to the private key. That's the thing. If you do poor mismanagement of your private key, or if you, for example, expose the location, well, of course, it's like any form of money in that case. But the cool thing is that unlike digital money in the current banking system, where if I have money in my account, some people have had this, they've experienced when being related to crypto, they see their bank accounts just getting shut down with no explanation in that case.
Right. But Nick, what happens if legislation starts to be put forward where as you know, there's all kinds of laws made to serve the regimes that be and the powers that be. So what happens if they start to make laws to make it possible to demand that you relinquish your private keys?
Right. I have a very kind of detailed answer to that. I first off, initially, it tends to be that when governments ever try to overregulate something or censor some form of new technology, it gets smarter, it gets better. We saw this in, for example, a wide range of different industries. And I hate to kind of relate it because it's seen as a criminal activity, but torrenting is a very good example of this. Or, for example, mass media distribution. And it's interestingly enough a peer-to-peer technology. And so Bitcoin and cryptocurrencies function in the same way. It is peer-to-peer. It is censorship resistant in nature. But I would say this. I think that what would happen is that during a time of crisis, when, for example, global economies go into recession, governments may be able to censor it temporarily in this case and make it where the incentives to really accept and use crypto for most use cases are not beneficial. When it comes time and there's enough of an incentive to actually adopt crypto, which I'll be fair, we haven't seen yet on a wide scale. When that time comes, people will go through those extra means. And I think it's what you're seeing in Argentina. It's what you're seeing in a lot of these developing economies, whether it be gold or silver or Bitcoin or all these different hedges. People will thrive for it in this case. They take the extra steps and requirements in order to get access to it, even though it's extremely difficult with the regulatory frameworks.
Right.
In the case of Libra, you can't store your wealth in Libra and know that governments won't be able to censor in this case if you enter private keys, because if they shut the door off to Venezuelan citizens because Maduro says so, then you're out of luck. You can't use that payment.
And Nick, also in that sense, there's an intractable bond between enterprise and the government in almost every sovereign nation globally. So you raise a good point there. The question mark will always be on the centralized aspects of Libra or any other entity that emerges clearly with its own profit and the profit for those that back it in mind. So you raise a very valid point. Now, let's push it back a bit to the discussion of the people for a moment. Now, one thing you have cleared up is the Bitcoin by core design and technology really works in isolation from the interests of enterprise and government. You made that clear. Now, when we talk about the fundamentals and form of the question mark of social consensus, whether or not that can be changed and thwarted technologically, now that would, I would argue, impact the trust for the people, for the users and the supporters of Bitcoin, irrespective of government, irrespective of enterprise.
That it can change over time.
The fact that it can be potentially changed, how does that also relate to the trust from the people in supporting something that maybe causes concern for them, if indeed it's possible? So the plausibility question is really not just for enterprise and government. I didn't make that clear.
Yeah, I think that the incentive structure behind Bitcoin makes it highly unlikely that any severe negative changes would ever come, because the economic incentives are there to protect it. Any system in the world, anything is, mutable to change in this case. I think that's something we have to accept. So we can't just kind of rail on Bitcoin for that. If a government decides to go haywire and mismanage monetary policy, or a central bank decides to do that, or a government, goes radical and sets some set of policies, then it can happen. And it's happened throughout history. The thing about Bitcoin in this case is that it has an economic barricade in this case that says that the miners have an incentive to make sure that Bitcoin's network operates as intended. And along with that as well, that if there is any changes over time, that we are slow about it, that we are certain about what we're changing, and that we make sure that this isn't something that's going to destroy all of the foundation we built. So SegWit, for example, something so simple, and that a lot of people were confident in the security, that it would have no damage to the network. It was implemented on Litecoin. So many people were still hesitant about it. We were I don't know if we want to, we're not sure if we want to change the block structure here just to get the small benefits that it might bring for Lightning Network, and for example as well the extra block size for those who upgrade to SegWit blocks. Again, over time we integrated it. It was a safe update, and again, ever since then, if you think about it, that was back 2 years ago, really, when I was starting my YouTube channel, when SegWit was being talked about. I think in August it was implemented. It's been 2 years. Bitcoin hasn't seen major improvements like that in a while. So I think that the time-tested era of Bitcoin in this case, or not era, I guess, last decade.
And it's very clear also there's a reticence to tweak it too much, because once again, it's one of its key points of value, especially coming from the core devs of BTC, is its security, and they don't want to essentially mess it up, for the people by doing too many tweaks,
I think,
and not let them be too ambitious too quickly.
we were talking earlier about Bitcoin being programmable money, and I think this kind of segues in this topic. What I think is going to happen, Brett, is as much as I've got my dislikes about, to the efficiency point of where Lightning Network is and a lot of the supposed scaling solutions for crypto networks, I wish we were further ahead. That's the only thing I can say, because I don't want to judge them. I think there's a lot of bright minds working on these projects, and it's wrong for me as someone who can't contribute to criticize them to that degree. But I will say this. I think what's going to happen is that you're going to have all types of different layer 2, you can call them layer 2, whatever you want to label as, things that are built on top of the Bitcoin network. All Bitcoin has to do is do what Ethereum's done, and that is to provide a framework where people can build on top of it. And maybe it's at the point where it can do that. I'm just not a developer to the degree of where I can really gauge that. I can see that on Ethereum right now, the DeFi movement is already propagating this. I can go earn 6 to 9% interest on money right now.
Right.
I can't do that in a bank account.
Well, let's talk about that, Nick, to interrupt so I better understand. Let's talk about that in the context of the forked family of BTC. When we talk about Bitcoin SV, when we talk about Bitcoin Cash, we have to, because they have their own unique agenda. They have their own philosophical premise. And one wants to be seamless, borderless cash. The other one wants to also be programmable by design, add applications to its narrative. And then obviously you're suggesting that would be good for Bitcoin. Some of the Bitcoiners don't want that for Bitcoin itself. They want to keep it raw, keep it very crude in its design. So what are your thoughts on the forks? What are your thoughts on the different narratives? And is there any value in any of them? It's an open question.
Yeah, like most altcoins out there, I put the same kind of risk to any kind of Bitcoin fork. It's very difficult to make a fork win out in the long term, even if you might have the better technology. As we mentioned, network effects rule all. That's one of the major things you need. And I think the way that both of those forks have been marketed have probably been their biggest downfalls. For example, you can take someone as disliked as Craig Wright in this case, who's like, for example, the space has just gotten very hawkish on and stuff. And with due purpose, he's been claiming Satoshi when obviously, we haven't seen him make the court payment he's supposedly due.
Right.
But
we can talk about him in a moment too, for sure.
Yeah. But the thing is, and for example, it's kind of like, as someone who, for example, I kind of pride myself in the street smarts of just being able to socialize and knowing how to be personable. I think I like to think I'm relatively personal, but
Definitely.
The thing is, I say, oh, thank you. I see Craig Wright, and I'm like, God, I'm looking at BSV, and I actually see some interesting concepts, and it's an interesting vision separate from the Bitcoin white paper, but it's kind of unique and interesting. And he goes around priding himself as Satoshi. And
Nick, you raised such an interesting point, because if you look at traditional markets, people didn't invest in Google because they liked the person who started it. Well, most didn't. If you look at what Bill Gates has built, no one invested because they like him. But in crypto, you are absolutely right. The network effects also align with personal interests, the affiliations, connections they make in the space. So with Craig, a lot of people perhaps don't know that he has. I've heard rumors that he has a condition such as Asperger's or some sort of autism. I don't know if that's true, so I'll qualify that. But it would make sense, given that I'm Australian, he's Australian, and his behaviour is anomalous to me. His behavior is extremely arrogant and is extremely egotistical when he presents himself at times. And so for that reason, I totally understand. But if we remove Craig from the equation for a second, the fact that he's sensationalist, the fact that he makes these bold claims, if we just look at things like his court case, for example, we look at the Kleiman issue itself, forget about him claiming Satoshi. If he does have a significant stake of BTC, just as Craig Wright, then are you concerned in that respect with regard to the potential for that to impact the marketplace? Now, I mean that more generally in the sense of the Bitcoin billionaires. I really mean this: the Roger Ver scenario, the Craig Wrights, the exchange representatives that we don't know, and many others in that top echelon of ownership. Does it concern you about this genuine ownership disparity, where the top 1,000 own such a huge chunk of BTC?
Hmm. I would say, in the worries of like a flash crash or them just selling all their BTC, it really wouldn't worry me because if they were to sell it, there's the liquidity now that yes, it would lead a major price shock, no
Well,
doubt.
we've seen that with the hashing wars. So, we've seen it in
Yeah,
history.
yeah, no, 100%. I have no doubt it would probably be, obviously, if you have a huge supply on the open market compared to what you had yesterday, then there's obviously going to be a dip in price. I don't think it would stop Bitcoin from being what it is, though. I don't think it would stop people from mining Bitcoin. I don't think it would stop people from buying it.
Mm.
Again, a lot of people, as you talked about, are on the idea that this is a rising store of value and they'll pick up the dip in that case and they'll buy more exposure to it.
Right, because liquidity is king, and basically the system
Yes.
is such that it can support that kind of movement.
Yeah, if we're talking about price, liquidity, like you said, is king in this case. It's what someone will pay. For
Mm.
example, if it might dip $2,000 or $3,000 with all that sell side action. But
Mm.
what Craig and them would really want to do if they were going to sell is they take it to OTC probably, and then
Probably. So the
Yeah.
question is, that you've sort of answered that question, that potential risk. When it comes to tech, Nick, my concern as two people here speaking together as friends and also as colleagues, we both regard tech as paramount. But when liquidity is paramount and when price seems to be paramount in the space itself and network effects, they don't always align with tech itself. And we know in history that the alignment of tech and liquidity, or the alignment of tech and the network effects, has to be such that it is the most performant. So my concern is BTC going to uphold that position with the best technology coupling that now pole position of network effects? If you understand what I mean, because I'm
I
concerned
do see.
at this point in time.
Yeah, I do see what you're saying. Well, it really depends if Bitcoin is going to be something, again, as you've kind of, I think, brought up as an argument, as whether or not it's going to be really used for much utility outside of the store of value. Because, I mean, you can take, for example, look at equities, any type of asset across the world.
Mm-hmm.
Usually their value is not reflected in fundamentals in this case, in the fundamental utility. I think, for example, in the Australian housing market and here in the United States, properties go for way higher values than they're probably worth. And what kind of utility you can get out of a home. But of course, it's a very important thing for most people. But and then that goes into the same thing with Bitcoin. In this case, Bitcoin will go through parabolic rallies. It will dip down below fundamental value. That's just what it does. It's markets, and that is something you cannot avoid. It's human nature. And this interesting proposition of kind of tech utility, I think it's the incentive for real people who hold a lot of Bitcoin to make utility on top of it and to support these kind of second layer projects on top of Bitcoin. So we see that.
If it doesn't happen, do you think that BTC will survive? If we don't see some sort of programmable aspect and build upon the code to advance it, do you think it can just emerge as sound money in time, irrespective?
Not as much value as it could have.
Mm-hmm.
I'll say that. It's the idea that, people, for example, want Bitcoin to keep going up. Eventually it will stop. There will be enough people who own Bitcoin as a store of value. And for example, there will be incentives for people to take risk elsewhere, and that can make it lose some of its value. And I think eventually Bitcoin will find a relative amount of market value, similar to kind of gold, where there's still some swings, but at the end of the day, gold's pretty well known around the world and everything, and it hedges with inflation quite well. It doesn't really grow much over the last decade. You'd be, terrible to be holding gold with all the assets that have been going up. Now it's doing well because there's risk going on. There's devaluation of currencies going on. There's all kinds of things. The asset bubble is faltering. It's the same thing with Bitcoin. If we wanted to stop there, Bitcoin can grow to a lot. It could be a multi-trillion-dollar market just being a store of value. But I want this to become something even greater. I would love Bitcoin to be a programmable layer and be the store of value for wealth for everything in the world. As I mentioned about that debunk startup, I keep mentioning that, but I was one of the most interesting things I read about Bitcoin that's related to DeFi. And it was just showing this idea that we could hedge all of our wealth in the world on Bitcoin as a settlement layer, and Bitcoin serving as the underlying store of value, in this case, when we actually settle transactions. So I thought that was really fascinating. I thought that was absolutely incredible. And that was a very unique way of using Bitcoin as a store of value.
Absolutely, Nick. You need to start writing some papers on these concepts, because we just need more discussions on the prospects of how Bitcoin can be regarded at the very least. Many people are going to have very, very strong opinions on how Bitcoin is and should be, but I also want to raise some tough questions about the power of manipulation in the space right now. Much of the manipulation, we don't talk about enough, but when we talk about things like China hustle, surely the conversation can move into the global hustle 2.0, in the sense that there's things going on in crypto where there are whales that are literally affecting markets. There are exchanges involved in significant holdings who thwart the market to their own ends. I mean, I don't know personally the depths of this, but I strongly suspect this is happening, right now. So what are your concerns when volatility is not necessarily organic, when it's driven by things like wash trading, and I mean seriously driven by wash trading, more than people are talking about, when things like market making are so powerful in this space? I'm concerned, Nick, that volume is not real.
Yeah. When it comes to Bitcoin in this case, I'd say that Bitcoin's spot price is not so much affected by wash trading. It's mostly altcoins in this case that are when an asset is entirely traded on exchanges that can literally are making fake buy and sell volume, they can set whatever price they want. In the case of Bitcoin, you can't really manipulate the spot value with wash trading because I might create some no-name. Let's say we created the Nick and Brad exchange, right? We could say Bitcoin is going for $2 million and it just rallied 5 minutes ago. No one's going to care about that market rate. There's enough solidified exchanges that provide liquidity to block out that. Now, in the case of market making or maybe reporting false volume, that is true. There is a lot of exchanges providing fake volume for Bitcoin that's saying there's 20 billion traded over the last hour. Really, it's about 1 to 2 billion, if anything.
And does that concern you, Nick, given that there's a lot of fake reports out there to obviously uphold the current scenario and the current overall market cap of the industry?
It does make me concerned for a lot of retail investors. That's why I pointed out on my channel, when I started to see the volume on a lot of the coin aggregate sites, I'm like, guys, this is not real. And some people are like, Nick, why are you saying there's only this much volume in the market? Because Bitwise did a very good report on this. And I think that they even though they were a little hawkish, they discounted all of the Asian exchanges. There's some real volume there. And you've seen recently, I think, it wasn't Upbit. It's one of the other Korean exchanges finally reverted their
Was it Coin One? I'm not sure.
No, it's not Coin One. It was I don't know. I'm blanking on it right now.
That's all right.
Yeah, but anyways, one of them had changed their volume back and everything. So I think it's starting to revert now.
And what's interesting too is, and I will also encourage other people to look into perhaps exploring the possibility of writing other reports if they have that kind of background, because we don't have enough reports, I think, that are objective and neutral. Because even with that report, Nick, that was one of many I want to see emerge. Because the reason I broach this is that now with the suggestion of the global hustle I mentioned, I don't think that it's solely an issue in China. I certainly don't, knowing what we know about crypto. I think that there are differential agendas. I think that certain exchanges in different parts of the world, they want their startups to succeed. Those that are in the VC position, they obviously align with those interests. So my concern is there more fake volume than we are really talking about? And is it beyond even the ones that are purported by that report itself? I want to see more reports. And also in that sense, the point of the wash trading, I wanted to raise the question to you about the other startups, the altcoins as we know them, in terms of how they can impact BTC. Because if there is rife wash trading there in that camp, surely because there's a dearth of institutional money currently pouring in, that the altcoin system fuels arguably this reciprocal pendulum sort of effect between the alts and Bitcoin in terms of how people sort of traverse the space with their money, and even obviously the stable coins as a safeguard. So does it concern you that the alts still affect BTC in that sense if wash trading is rife?
I would say that not so much, because I think it's the people are starting to wake up to it. Anyone with serious money in crypto has realized, you can even see it on some of the major coin aggregate sites. I wish they were more kind of on top of this, but you can see there's all these randoms. There's this one Egretia that I saw recently.
I saw that. I could not understand that at all.
Yeah. Chart just literally goes
crazy.
It literally just shoots up to the moon and then dumps. And it's what that is you look at the exchanges. I think people are smart enough to look at this, and they see, well, wait a minute. This is all happening on no-name exchanges. They're not on any real regulated U.S. or European or Australian exchanges. There's no these are no-name exchanges. They're reporting they've got more volume than Binance. And lo and behold, it just goes up to the sky and everything, and it starts dumping. So what's really happening there? Some people might not understand that. What's really happening is that they're artificially giving this token that they created a value, an increased value over time on their exchange with fake volume. And when users see this, so there are some that are getting duped into the idea that, oh my gosh, this thing keeps going up. I need to put my money in. So they deposit their money on the exchange and they buy the underlying asset. But the thing is, they never bought the underlying token. That's the funny thing. What the exchange's intended purpose is to get your crypto on their exchange. That's
exactly. At any cost. And often there's things like buybacks, or there's whatever means is in the back end discussions between the startup and the exchange to optimize the exchange economic sort of outcome, so they can profit from it too.
What they already profit when you send your money to them, because the thing is, you're sending Bitcoin or Ethereum or some kind of like trade, like altcoin or stable coin, and what they're doing, their whole goal is to send it, because once you've sent it, it's gone. It's their money,
right?
And there was actually on CoinMarketCap, they actually started putting alerts now. Thankfully, they did like this. I haven't seen any other coin aggregate sites do it, where they basically set an alert next to exchanges that have had reports where people can't withdraw their funds. And I've been saying this for months, and we're now finally starting to see it where people are just catching on to it, and now they're like, okay,
it's an absolutely imperative point we make, because obviously we want to make sure people are not getting wrecked, as we call it, over and over. One of the big issues right now is startups' control of lockups and how they amend them to suit their own ends, and particularly those behind them, even with pressures from either market makers, VCs. I'm not sure who is doing this, but the lockups aren't necessarily reinforcing trust in the entire system, because they're not necessarily working for everyone. But Nick, what was interesting in you discussing the issues, with regard to the alts in terms of trust. One thing that's for sure is that with BTC, you don't have those centralized parties. You don't have that question of control, because it's already automated in many respects. It's already unfolded as an open source technology. And perhaps that's the asset there, one of them, in that it's operational now, compared to the situation where if we're talking about the issues of trust in altcoins, one of the things that can happen quite a lot, if we're alluding to the thing you made a point of, is that it's one thing for a token to go up in value substantially, but it's another thing for that to have proper and authentic liquidity. And often the agenda is to push the price of that for those, for certain startups to have this sort of facade of value. But when it comes to genuine access and genuine real value, it's not necessarily premised on the authentic developments of that startup. And I mean startup because I want to raise the question to you about the difference between permissioned entities, I'll clarify, centralized entities as startups that may utilize decentralized or blockchain-based technologies that have a token to then infer that there's a correlation when there's not. So I won't name names, but there are startups perhaps that are transitioning. They're utilizing the token for a crowdfunding mechanism. It's not actually designed as a utility token, despite being sold as that, Nick. They make their money, but their real asset is actually in their transition, using that money into a private company that has no correlation at all with that utility. So my concern is some of these alt startups are not necessarily disclosing their intention of what that token's actually for in the beginning. And perhaps,
do
you know what I mean?
I would say, yeah, and just to, I guess, kind of clarify, so when you're saying startups, you're talking about a lot of the ICOs and like an IEOs, whatever it may be.
Well, not really. The reason why, Nick, is because the IEO and the ICO is some of them for sure, but that's just a mechanism to start. The IEO and the ICO is just literally a marketing ploy. But you don't need to use an IEO and ICO to be in this camp. You could just literally start. But the point is, it's all about the token. Sometimes that token literally has no correlation at all with the business itself, the startup actually emerging separately.
Yeah, well, I think that's why you've got the rise of security tokens, because people realized equity. If your system's based off revenue, then people are going to eventually say, "Oh, hold on, I want a piece of the company. I want a piece of the pie in that case."
Well, that's why I asked, Nick, is because do you think that security tokens in some respects are going to have a real significant position in the future, given that right now a security would imply equity, it would imply dividends, a lot more trust in that scenario if they're moving in a private sector sort of scenario, because if the token doesn't actually have any authentic correlation with the business they're building, then WTF is what I'm thinking.
Yeah, no, you're absolutely right. That's why most altcoins are going to fail.
Right. Okay.
True. Like unless they have a really good utility case. The thing is, to clarify the point about security tokens, if there's a lot of platforms coming out that are security token platforms that just basically their main objective is to provide a platform where people can deploy a new token that represents equity or some ownership of something. And I think that that's like cool and all. But what I really think is the most fascinating platform right now is Ravencoin. And this is one that's been doing it in more of a decentralized way. It's basically where, just like on Ethereum with creating ERC20 tokens, on their network, you can create and digitize pretty much any asset in the world. And I thought they did it in a very unique way, comparative to trying to be, regulatory compliant and do everything kind of by the books. They're kind of the Bitcoin for digital assets.
Okay.
So I recommend if you haven't looked into it, and also for your audience, if you guys haven't, it's founded by a lot of cypherpunks, a lot of people who, again, were really early on in the BTC camp and stuff, when it started out in, the crypto space in general. But I don't see a future so much for a lot of utility tokens outside of the ones I've mentioned to you some of the ones I like. I like Chainlink.
I know you like Dash.
Yeah, Dash as well. Dash is very interesting. There's one of the few that really sticks to peer-to-peer digital cash and has been really expanding and stuff, in the sense of, emerging markets. So I like a lot of I like a diverse range of approaches. None of them are perfect to me, and none of them are focusing on most of them aren't focusing on the same exact.
What matters at the end of the day, though, Nick, is that you're looking at a use case as a primary point of value when you start to explore the possibility of any of the presentations or any of the white papers or any of the teams that come to you. And I think that's what we need more of, is people who are geared in that way of thinking beyond the prospects of immediate returns, beyond the prospects of the short-term shill. So full credit to you. And I am certainly aware from all the many discussions we've had that there's no guarantee with any of this. But the thing is, we're willing to put those blockchain bets on technology, and willing to, literally support what the best we can to the best of our knowledge, what could potentially emerge as something beyond the plethora of BS in this space and sort of vacuous shell entities and companies that really have no intention of being anything more than profit-making machines.
Absolutely. Yeah. I think there's, again, there's a lot of crap and noise in this space. It's been around for a while, and I think it'll continue to fester just like it does with any new emerging technology. There's always those who come in for the quick buck, and a lot of those people sadly will lose out and stuff because sometimes they're average everyday people. But honestly, if you're in this space for the right reasons and you're in it for the long game, I think there's a lot of opportunities to not only benefit for yourself, but to help others. And that's, I think, anyone here who's here for the right reasons are here to help others in that case. So it makes me feel confident. If there's going to be value in this space, if there is that utility, I think that we're going to be at the forefront of building that utility and playing a big role in it. Well,
Nick, I couldn't have said that better myself to end this conversation. It's been so fascinating. I know it's been long. For all listening, you have survived. It's been a privilege speaking to Dash. He's super well known in the space, and the reason is because of the respect he commands when it comes to being real and being so focused on the technology and the potential of what this can do. Nick, one of the big things you've sent forth in this message today is that you're bullish on technology. You're bullish on the possibilities of where we can see crypto and blockchain really start to change the narrative for what we can do with it to essentially enfranchise change, whether that be socioeconomic, whether that be socio-political, whether that be socio-cultural. The point is that it's all about trying to enable betterment for all of us as participants for the future when it comes to money, when it comes to business, and when it comes to the possibilities of how we can have more autonomy. And Nick, you've always been a supporter of that. You made it clear that we've got a long way to go. There's perhaps a lot of people in this space that don't feel the same way and that they're focused on solely their economic position. But over time, I think both of us agree. We want to make sure that the narrative shifts to be tech with network effects together to really prove potential.
Brad, I couldn't have said it better myself, and then along with that as well, I say all the same back to you in the sense of the positive comments you made earlier. It's a pleasure to be friends with you and be here on your channel and it's probably been a really good, long, solid conversation and stuff, but it's always worth it. It always makes it worth it.
Well, Nick, mate, thanks so much for your time, and hopefully for everyone else, they've just had a bit of an insight into BTC and some of the ramblings, between, but again, beyond the friendship, there is that collegial respect, and hopefully it's been of value to some others as well.
Absolutely. I have no doubt that people enjoyed the conversation. Thank you guys for as well listening to me ramble on alongside Brian and stuff. We always enjoy doing it, I'm assuming.
Thanks, mate. And we'll catch up really soon.
Awesome. Sounds good.